Welcome back to News 5 at 9. It is 9:25. Mark Davidson is here from Cornerstone Investment Management, and we're talking about something that can be relatively confusing, and you're going to break it down for us today. When we talk about our currency, we've been hearing, oh, the U.S. dollar's losing to the British pound and different currencies around the world.
Right.
But today we're going to talk about kind of what that means, I guess, is the big question.
Absolutely.
So when we talk about why the U.S. dollar has declined, give us some idea of why and what that means.
These are kind of big picture decisions that are being made in Washington and also around the world. The first is what's known as U.S. monetary policy, and that's a fancy way of saying the decisions we make with our money supply. When we lower interest rates in response to a crisis or a perceived crisis, that increases the supply of money. If you remember from basic economics, when you increase the supply of something and the demand remains the same, that something decreases in value.
Exactly.
So that's one thing. Also, federal deficits, federal spending factors into this, as well as consumer borrowing.
And what does that mean exactly?
A lot of times we are borrowing our own money, borrowing out of our house or borrowing from some other source to fund lifestyle. As United States citizens, we tend to do that. And when we borrow to consume, we are not building assets, so we're borrowing against our own future, in essence.
Something we don't recommend, though. I think that's
right.
when you, especially when you put it like that. Now, you say trade imbalances also something that comes into play here.
That's a fancy way of saying when you or I borrow, we are borrowing to spend money on goods that are produced overseas, and that's what a trade imbalance is. When we import more from China or, say, Germany than we export to each of those respective countries, we have what's known as a trade imbalance.
Now, the average American citizen that hears this, what does it mean exactly for them, and does it mean a lot?
It does, and it will over time. It depends upon the decisions that policymakers make over the next few months, months and years, frankly.
Now, you gave me a good, I guess, reference during the break. We were talking about the things that we buy. Coffee, hugely popular in this country. That is something, though, that you could see actually cost you a little more.
That's right. We don't produce coffee in the United States. That means we import it. We import it from Brazil and Colombia, Indonesia, and all sorts of different countries. Well, if those countries' currencies appreciate, that means it's going to cost us more in dollars. It used to cost, say, $4 for a pound of coffee. It might cost $6.50 or something like that.
So that's where that will actually be translated and coming out of our wallets. Maybe not largely, but...
Well, and it will over time, because we live in such a globally integrated economy that the suit that I'm wearing was made in Canada. So that costs a little bit more.
And what about cars? That's a huge market too, I think, for imports.
And it depends upon where your car is sourced, where it's made. If you buy a car that is made in Germany or, say, Sweden, most Volvos are still made in Sweden, I believe, then your car is going to cost more. If your car is made in the United States with imported parts, it's going to cost more. If your car is made in the United States with U.S. parts, it's going to remain roughly at parity with the value of the dollar.
Now, we were also talking, too, if this was cyclical. Is this something that will eventually work itself out, or is this something that the American public should be concerned about and keep a closer eye on?
I think everybody needs to keep a closer eye on this, but I think it's something that if the proper decisions are made at the governmental level, then we're probably going to be okay. But you don't necessarily want to enhance or stimulate the economy on a long-term basis by debasing your currency, and that's what, in essence, we've been doing, is we've been decreasing the value of the dollar. And
quickly, we're almost out of time, but as people plan for their vacations, a lot of people taking their winter vacations, I know a lot of probably New York businesses are glad because more Europeans are coming here. So as Americans, what should we do as far as planning those vacations so we don't spend a fortune if we don't have to?
You can look to find out where the dollar is not necessarily as depreciated versus other currencies. My wife and I took a trip to Argentina a couple of years ago. That's a perfect example of a place where, frankly, because of bad economic decisions, they found themselves with a reduced value of their currency. On the other hand, if you go to London, you're going to be spending probably 40% more than you would have otherwise spent. All of Europe is the same way. Any place where they use the euro is going to be very, very expensive.
Do you know I was going to ask you for travel advice today, too? Financial and travel advice, you can get it at Cornerstone Investment Management. Give them a call, 626-6292. They're located right over in Daphne. Good to see you as always, Mark. Thanks for stopping by. We'll be right back. I think that's so interesting, though. You can get so much more.